Hello everyone, this is Paul from the APNacademy, and in today's video, we're going to be talking about the Fibonacci retracement tool. Now, this is one of the most misunderstood topics in this trading industry. Why? Because most traders think this Fibonacci retracement tool is an indicator, yet it's not, right? So if you've been thinking that this is an indicator, I would suggest you change your mind. This is just a tool used for doing technical analysis that is provided to you on all the charting platforms that you use to do your analysis, right? So if in case you've been taking it as an indicator, please change your mind, right? Because it's not an indicator. It's just an analysis tool that you can use like any other, like the horizontal lines, the diagonal lines that you use to draw trend lines, and many others that you've been using. So what are we going to be covering in this video? We're going to be covering a number of things, which include, we're first going to be defining what the Fibonacci retracement tool is. We're going to be looking at its uses, because it has uses, why we use it. Then we're going to be looking at levels. Since it is a retracement tool, we expect it to have levels whereby the price is going to be retracing to. And we're going to be looking at how to draw and use it, because most people do not know how to properly draw it. Most of the traders are actually drawing it wrongly, and they do not know from where do I start and where do I end. Then lastly, we are going to be looking at how to trade using this Fibonacci retracement tool. So as usual, if you've been following our videos, we usually start with theory so that we make you understand what we are studying about in the video. And then we go to the charts and then we do practicals together so that you're not left behind when we're doing the illustrations on the charts, right? So without wasting any time, let's get into it with the details that we're supposed to be covering. So what is this Fibonacci retracement tool? Now, you guys are going to notice that in a normal market situation, when the market is making an uptrend, we do expect the market to be making higher high, higher low, higher high, higher low. While in a downturn, we expect the market to be making lower low, lower high, lower low, lower high, lower low, like that. Now, in a normal market condition, this higher high, once it is broken, we expect the market to come back and retest it. This is the normal market movement, right? The same applies to a downturn. When the market makes this lower low, makes a lower high, and breaks this, we expect this lower low to be retested by the market, right? Now, there is going to be an abnormality in the market, sometimes whereby the market is not going to retest these levels here. What causes that abnormality is when the market, let's say, creates a high, creates a higher low, and then we do have, instead of market giving us a reasonable move up, like in a break, it instead makes a very long move up. Now, when the market makes such a long move up, remember these guys, these market makers or liquidity providers to the market do not want to carry everyone along with them when they are moving. So you'll be expecting the market to move downwards, right? To come and retest here. So the trend traders will be waiting for the market to come back here, and it will not return. I'm sure most of you who have been trading for some time know exactly what I'm talking about. And those who trade retracements, you'll enter your trades and the market moves for a short time and then takes you out. Now, I'm sure you've been wondering what causes this and all that. It's because you do not understand that we have abnormalities in the market. And one of them is what we're going to be solving today. And we call it the impulsive moves, right? So this situation here of the impulse is solved by the Fibonacci retracement tool, as we're going to be looking at when we come to its uses, right? Then the same applies to the downtrend. When the market makes a low and on the retest and then breaks, in a normal market it will break and then it will retest. But when this break is so impulsive, the market makers or the liquidity providers will not come and fetch you guys here. It will move and stop somewhere, and then it continues with this direction. I'm sure if you've been trading, you have experienced this, both in uptrend or downtrend. Now let's define what is this tool exactly. Since we are saying that this tool is very important when it comes to impulsive moves, let's first define what is it exactly. Now, this is a technical tool, like we started with. This is not an indicator, guys. Most of you know it's an indicator, but that is wrong. In case someone tells it's an indicator, no, it's not an indicator. It's a tool given by all the charting platforms that you do your analysis on or you trade with. It's provided there, not as an indicator. That's why it's not found under indicator list, but it's found under the tools list, right? So this is a technical indicator that we use to determine possible levels that price could retrace to after an impulsive move. Please only use the Fibonacci retracement tool after an impulsive move. I've seen a number of traders, actually most of the traders I've seen or interacted with are using the Fibonacci retracement tool in normal market movements. Under normal market movements, I've clearly showed you that we expect the market to retest broken levels. The moment it's retesting that, there's no need to bring in the Fibonacci retracement tool. Are we together? Because that's a normal market movement, right? So let's move on. What are the uses of the Fibonacci retracement tool? Now, if you're a trader, you clearly have to understand that whatever you're bringing to perspective, or whatever you're studying, whatever you're looking at, whatever you're researching, should be leading you to two things: either to buy or to sell, right? And where do we buy from? We know that we are buying from support and we are selling from resistance. Sometimes people call these ones demand levels. Sometimes you call these ones supply levels, depending on whatever method you're trading or whatever you want to call it. But at the end of the day, these are just support and demand levels. That's economics. Those are the terms that we use in economics. So however much you want to call it, nice names and all that, it remains support and resistance, right? So now, also the Fib tool, or what we call the Fibonacci retracement tool, is supposed to be helping you, lead you to that direction, or making that decision of where am I buying from, where am I selling from. This takes us to the first use of the Fibonacci retracement tool. It's supposed to give us support and resistance levels whereby we expect the market to retrace to. Let me just illustrate for you here using an example. For example, if we have an impulsive move down, right? Now, we don't know, the market has not made lower lows yet. In a normal market situation, we may have lower low, lower high, lower low, lower high, lower low. But in this case, the market has just impulsed down. So we don't know. In this case, we would have a lower low here where we expect the market to come to. But in this case, we do not know. So we shall draw our fib from where the impulse started up to where it stopped and the buyers tried to come into the market. And then we shall mark those levels, because the fib tool has levels like we're going to see. I'm going to show those guys who have never used it or who don't know how it looks like just shortly after this. It has levels here. Some of them start with 23, but I'm going to give you the levels that you're supposed to be having. You don't need to have all of them. You just need to have a few of them that I'm going to give to you. So the first one here can be 38.2. The next one can be 50. The next one can be 61.8. This is the golden ratio. So these levels do help give us where we expect the market to retrace to. Now, remember how we defined the support and resistance. Any level above current price, this is current price, where we expect sellers to come in becomes resistance. So meaning in this case, this is a resistance, this is a resistance, this is a resistance, right? Why? Because the current price is below it. So when price reaches there, we start observing the behavior of price, right? One thing that I need to tell you guys is, do not take trades once the price is not showing you behavior of changing trend, what we call change of trend. Most traders are losing money because they take trades before change of trend. So even if the price has come to your resistance level or support level, do not just take trades like that, right? So that's the first use of the fib level. Now let me also illustrate it in a case of a buy. For example, if the buy makes if the price is moving up and makes an impulsive move up, right? In a normal market situation, we expect it to be creating higher highs, higher lows, higher highs, higher lows, whereby we expect at least is retesting these previous broken highs, right? Now, when the market just impulses, like in this case, what do? We are going to bring out our fib tool, then we draw it from where the impulse started until where the impulse stopped. And the levels, like I'm going to give you the levels that I do recommend. We shall have 38.2, then we shall have 50, and then also, of course, we shall have also the golden ratio here, right? The 61.8. Now, these levels in this case are acting as support. Why? Because this is current price, and we define the support as any level below current price where we expect buyers to come into the market, right? So this will act as your support, support, support. So when price approaches these levels, it's not a must that you're supposed to buy immediately, because there are certain things you're supposed to be looking out for, a change in trend and confirmations, right? So the market will come to these levels here. It may change trend from here, or it may come and change trend from here, or it may come and change trend from here, as you are going to be observing that, right? You do not just take the trade immediately. So this is the first use of the fib tool, right? Now, these are the importances as I've listed here, as you're seeing on your screen. The first one is provides the areas of support and resistance. It gives you the levels that are acting as support and resistance. Then 2, it's providing for you your area of interest or area of entry. Now, if you've not watched, or if you do not know what area of interest or area of entry is, make sure you watch our previous videos on how to draw support and resistance and the different time frames that we do use when we're doing our analysis, right? So, but I'll briefly go through it now. When you draw your fib tool, it depends on the time frame you're doing it in. For example, we said you're supposed to have three time frames that you're supposed to choose. One is the analysis time frame, right? Then two, you need to have your entry time frame, and then three, you should have your refining. You should have your refining time frame. Now, if you draw your fib tool in analysis time frame, it's giving the area of interest. Are we together? If you draw it in your entry time frame, it's giving the area of entry. We do not draw it here because this refining time frame, we're just refining to get a better risk to reward ratio of this entry here that we have taken. So if you're drawing it in entry time frame, it's giving the area of entry. If you're drawing it in analysis time frame, it's giving your area of interest. An area of interest is, we do not take trades from area of interest, but we observe change of trend when we go to our entry time frame. When we go to our entry time frame and the price has reached this area of interest, we're observing change of trend. And once we're in our area of entry, we're not observing change of trend. Now we're observing where is our area of entry. Where am I going to take my trade, or where am I going to take my entry to that trade from, right? So that's the second importance of the Fibonacci retracement tool. Now, the third one is it also enables you to identify or to tell when the market is making a reversal or doing what we call a trend change, right? Now, most people do not know that the Fibonacci can help you tell when the market or the price is changing trend. I'll ask you just one question, and you just ask yourself, if in case you did not know, ask yourself, why do you think the 61.8% level is called the golden ratio? Have you ever asked yourself why it's called the golden ratio? Or have you ever read anywhere why it's explained to you why this level is called the golden ratio? Most people do not know why it's called the golden ratio. Even you who is watching right now or listening to me speaking to you, I'm sure you did not know. Or if people knew, they are less than 0.1% that knew that the reason why this is called the golden ratio. Now, I will tell you why is this one called the golden ratio? Because when the market is retracing, let me illustrate it here. Let's say it's an uptrend. When the market makes an impulse, we expect it to retrace to one of these fib tools, 38.2, 50, and then this is the golden ratio, 61.8. Now it can retrace to one of these, it can retrace to one of this, it can retrace to this one, or even 61.8. But we do not expect price to cross it because we have impulse, then a retracement. What do we expect? We expect the market again to continue up because remember it broke a previous structure. It's an uptrend. We are assuming it's an uptrend. It broke a previous structure. Now we expect it to just make a retracement or a retest and then it continues up, right? Now, the moment price breaks this 61.8, it means it's no longer interested in continuing up. This is what it's communicating to you, that it's changing trend. Once it breaks this, it will just give you a retest to the broken levels, because remember this was support. So it will just retest one of these support levels and then it drops down. The same applies to when the market is making an impulse down. We expect it to retrace to one of those fib levels, but not breaking 61.8. The moment it breaks it, it's communicating to you that I'm no longer interested in continuing down. Instead, I'm going to retest one of these levels here and then I continue up. Now, most traders do not know that. So I hope that you're going to put that into your practice in case you've been using fib, or if you've not been using it and this is your first time to come across anything or any knowledge about fib, make sure you put that into practice. You'll see price always does that. It communicates. In case 61.8 level holds it, it means that price is going to continue in that direction of the impulse. In case price does not hold it, it breaks the 61.8, which is called the golden ratio. For that reason, that means it's changing trend. That's why the third reason or the third use of the fib tool, we are saying that it helps us to identify when the market or price is making reversals or the trend is changing, right? Now, another thing that I would like to put across to you guys is when the market makes an impulse, what do we expect? We expect three outcomes. One, after this retracement, we expect the market to make another impulse. This is one. Then two, after the market making an impulse and a retracement, we expect it to give us a double top if it's an uptrend. Then three, we expect if the market makes an impulse and a retracement, it can also give us a lower high. This is the third outcome that we can expect. For the downtrend, it's just the opposite. If the market makes an impulse down and a retracement, we expect another impulse. One. Then two, it can also give you an impulse, retracement, then double bottoms. Just the opposite. The third one is it can give you an impulse, retracement, then a higher low. Sorry, yes, a higher low, right? So these are the outcomes that we do expect from the impulsive moves. I will just recap that. Fib tools are used only in impulsive markets. I'm going to show you on the, when we go to the practical bit on the chart, how most traders do use the Fib tool, but it's wrong. They do draw it in normal market situations and they're marking swing highs and swing lows of the market. And you end up gambling, not knowing where the market is standing from. If the market really is going, this is a retracement that's going to give us and all that. I will show you that to you on the chart and the correct way you're supposed to be doing it. Are we together? So these are the uses of the Fib tool and how it can do help you in your trading as a trader. Now, let's look at how we can access this. Now, this one is for those who have never used the Fib tool and do not know how it looks like, or even those who do not know where to get it from. Now, if you're using the normal market, the MetaTrader, for example, just go to any, if you don't have it on your chart, because it will not come there on your chart. Most times you have to put it yourself. So you just go to the horizontal line or vertical line that you've been using, right click on it, then you go to customize, and then you'll see two columns. I'm going to just show you this immediately here. You'll see two boxes, one for the ones that you've selected, the tools that you've selected, and those that you've not selected. Then look under the ones that you've not selected, the unselected ones, the available ones, then tap on it and insert it under the tools that you would like to use. If you're using TradingView, don't worry, I'm just going to show you after just this slide. If you're using TradingView, on your left, usually there are those ribbons or the tools are listed which you can use. Just the third from your top, from the top, the third on your left, there are those tools that are there. The third from the top, that's where you find those tools. You find the retracement tools and all the other tools. So you can select the Fibonacci retracement tool. The advantage of TradingView is that you can make your favorites and then you make them floating so that they're always available on your screen. So now, before we continue with our theory, I would like to first show you how we access and set up this Fibonacci retracement tool to the levels that we do want, or how we can put it amongst the tools that we're going to be using. So let's just go, let's start with the MetaTrader, and then we go to the TradingView. Let me just open my MetaTrader here so that we start with it. Okay, so this is my MetaTrader that I've opened. When I open my chart like this, I do have my time frames here, my tools here. So what am I going to do? I'm going to come to any of these tools, either horizontal or diagonal. I'll right click, then I do go to customize. Now you're going to see this, these are the available buttons that we do have on my left. And then these are the selected ones that I have here. Now, if I'm scroll through the selected ones, I don't have the Fibonacci retracement tool. You can clearly see the last one I have is the vertical line here. Now you can see the available buttons that I can select. So I'll look through which one I do want. I'm looking for the Fibonacci retracement tool and it's here. So I'll click it and then I insert, right? Then you can clearly see it has appeared here. This is how you do set it on the MetaTrader, right? Now, how do you set it on the TradingView? Let's just move on to TradingView for those who are using TradingView, and I show you where you can get the Fibonacci retracement tool from, right? So let's just go to TradingView. Okay, so for those who use the TradingView, we say that on your left, there are these ribbons. Yeah, these are the ribbons I'm talking about. These ones. You have these. These are all tools that you can use to help you to make analysis, right? Now we are interested we said from the first, this is the first, second, third. Now mine is already there, but in case it's not there still, it will be under the same place on this third part. So I can just click here. There are many other things here, the Fib circles, the pitch fan, the Fib Firo, the pitchfork, trend-based extension, and all that. We're not interested in these ones today, the Fib channel and inside pitchfork. We're not interested in them today. What are we interested in? We're interested in the Fib tool. So I will just click it and it will appear here, right? It will appear here. But also alternatively, I say that you can set these floating tool by selecting to mark it under your favorite. Are you seeing the star on the ends of these things? You can make them your favorites. For example, if I remove the star, you can see the fib tool, my fib tool has gone away from here. But if I come and I put it back, you can see the fib tool has come back here. If I do remove, I do click again on the star to remove it, you see the fib tool has gone away from my floating. So I can set this floating here to help me that whenever I want to do my analysis with ease, I don't have to come and look again for the tools that I want to use. So let me just put back my fib tool under my favorites. You see it's back. So that's how we do set. And so now we have it available. And now let's go back to our theory and we finalize what we can come back to the charts and we see how we can practically use it, right? Let's just go back to our theory bit. Okay, so we have now seen how we can access or we can put the fib tool amongst the tools that we're interested in using. Now we all have it there. Let's continue with our theory. We finalize it. Then we can go and do these things practically. Now let's get into the part that we have been waiting for, most of us. How do we draw the fib tool and how do we use it? Now, let me first explain to you this in detail. Let me first explain it to you here. Now, remember we have said we're interested in, this is the normal market, how the normal market moves, right? So when we break a higher high, I'm assuming in an uptrend, we break this higher high, the market has to keep retesting these broken levels, right? Now, we're saying that we only use the fib tool in an impulsive situation, right? No matter the market, the time frame that you're in, right? If you're in weekly, if you're in monthly and all that, you can use it in any time frame that you do want, right? But remember the time frames have different uses. In case you don't know the different uses of time frames, make sure you watch our video on time frames. It's just somewhere amongst our videos. Now, in this scenario, we do not use the fib tool. Now you'll find traders drawing fib tool from here up to high here, right? This is wrong because it's a normal market movement, right? We do draw fib tools. Let's say the market was coming down, 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 and then change trend here, retested, and then impulsed. This market is supposed to be retesting previous higher highs and all that. But if the market just impulsed, now we are interested in this. This is when we start getting interested in our fib tool. We are going to pick our fib tool. I've showed you where we have gotten it from. Now you're going to pick your fib tool. You long press here and then drag it until where the fib, the impulsive move stopped. Now someone is going to ask, how do I know the impulsive move has stopped? If these are all buy candles, impulsive move means that in this move here, that there's no sell candle, meaning that all of them are buy candles. So we shall start from where those buy candles started from until where sellers started coming to the market. This is the start where the buyers came into and then pushed the market aggressively until where presence of sellers came into the market. That's where you stop. The same applies when you're drawing the fib tool. Start from that. The wicks are inclusive. Include the wicks. Draw it until where the sellers came into the market. Also, the wicks are inclusive. Then you'll mark the fib levels that we have given you. Now, which levels are we interested in? We're interested in 38.2. We're interested in 50.0. And we're interested in the golden ratio, which is 61.8. This is the golden ratio. And I've showed you the importance of this golden ratio. Most people do not know its importance, but I've told you earlier on the importance of the golden ratio, right? Now, let me just repeat. These are the levels that we're interested in: 38.2, 50.0, and 61.8, making it the golden ratio. So in case your fib tool does not have them, we are going to insert it there. I'm going to show you how to set it when we go to the practical bit of it. And in case you have many, because some fib tools come with 23 point something, but that one usually is not so significant when it comes to identifying possible levels the market could retrace to, right? So you draw your levels and just mark all these levels here, and you wait to see price returning to them. The same applies to the sell. If this is the impulsive market move, draw your levels, draw your fib tool from here, drag it the same way you drag when you're drawing your diagonal, when you're drawing a trend line, the diagonal line, right? So you'll drag it from where it started from up to impulse down until where buyers came into the market. So your fib will start from here. This is the start for the sell, and then this is the stop, right? Where the buyers try to come into the market. Then you mark with the horizontal line, the 61, the 50, plus the 38. Remember to only draw it where there is an impulsive move, right? We're going to look at this practically on the chart. Are we together? So now let's go through the points that I've put across for you. Now, First, of course, this is just the write-up, but I've already explained everything. Select the Fib tool, then you click without removing your thumb and drag it from the start to the stop. I've explained to you what it means by the impulsive starting and then it's ending. You start where the buyer started impulsing, the wicks are inclusive, until where it stopped. If it is a buy impulsive move, until where sellers came in. If it is a sell impulsive move, start where the sellers started impulsing the market down until where buyers came into the market, right? Now, these numbers that we're talking about, the 38.2, they can either be in percentage or they can be in decimal. So do not get confused. I've already written them down here for you. The recommended levels are here. The 38.2, it can be in percentage form or it can be in decimals. 38.2 can be written as 0.382. This one is mostly done by a few brokers and also sometimes on TradingView. So do not get confused when you see it being written in decimals. It's the same. 0.382, when you convert it to percentage, it's 38.2. The same applies to 50.0%. It's the same as 0.500. 61.8% is the same as 0.618. And then 78.2. This one is not so significant, but just have it there. 78.2% is 0.782, right? So this is how you draw your Fib tool. And now the next thing we want to know how to implement is we want to know how do we use the Fib tool practically. I briefly explained, but now let's clearly see how do we use it when you're already on the charts, right? The first thing you're supposed to do is you're supposed to identify the direction of the market, or you can call it identifying the trend. Where is the market trending? Where is it moving? After identifying that, then you can look out for an impulsive move. Guys, do not use swing lows and swing highs like how other people, world traders, are using it. That's why it's not accurate for them. It's not accurate because you cannot use it in a normal market situation. If it's a normal market situation, make sure you're trading the breakouts and retests. The normal market situation, you're supposed to be trading it using the breakouts and retests. If you don't know what breakouts and retests are, our previous video that we just uploaded here is about breakouts and retests. Just look amongst our videos, you'll be able to see it there. The normal market situation, you use break and retest. You only use the Fib tool when it comes to an impulsive market situation. Do not use the Fib tool in normal market situation, right? So identify an impulse in that direction. For example, let me just illustrate here. If the market was moving properly, broke up, retested here, then here in this case, it made an impulse. This is a normal market situation. Higher high, higher low, higher high, higher low, then it impulsed. Then when sellers start coming in, so you're going to draw your Fib from here up to here. Draw your Fib and mark those levels. 38.2, 50.0, 61.8. Just mark them with the horizontal line now, like we're going to see. Then just wait for the rules that I have given you prior to us reaching here, right? Now, remember we say that we do not expect price to break this 61. The moment it breaks, I explained that it's telling you, the price is communicating to you that I'm actually not interested in continuing up. There's a high possibility I'm going to now continue down. So this is how we trade using the Fib tool. Are we together? First, identify the trend or direction of the market. And in that direction or that trending market, identify an impulse. If it's not an impulse, do not draw your Fib tool. Are we together? Then I've also showed you how you can draw the Fib tool correctly. Draw it from the start of the impulse. If it's impulsing up, start from down where the impulse started. The wicks are inclusive until where sellers came into the market. If it is a sell impulse, start from where the sellers started impulsing the market from until where buyers came into the market. And the levels we're interested in, once again, are 38.2, 50, and 61, which is the golden ratio. Again, I repeat this, price should not break the 61.8, meaning that you should wait for them, even if the price is almost breaking it, wait for the price to close and see how price approach the 61.8. So theoretically, this is how we do use the Fibonacci retracement tool. But now let's go to the charts and we see how we can actually use the Fibonacci retracement tool practically using practical examples, right? So let me just open my chart. I'm going to be using TradingView today. So if you're using the MetaTrader, still it is okay. It's just the same thing, just that the platforms are different. So let's just head to our platform. Okay, so I am on my trading view here. So now I'm going to first start by showing you what most traders do, how most traders draw their Fibonacci retracement tool and how they use it, right? Which I would like you guys to avoid. Now, what most traders are going to do is they're going to identify, let's say, a low, and then they pick out a high. And then they're going to draw their Fib tools. Remember, Fib tool is drawn from left to right, and you start from if you're drawing it, if it's an uptrend, you start from down to up, meaning your 100, the 100 is going to be down, and then the 0 is going to be up, right? That's how you draw the Fib tool, like we looked on earlier in our theory part, right? Now, but we don't need the 100 levels. The 100 level is just where the start is, and then the end is what we call the 0, right? Someone may be saying, but you didn't mention those levels. No, the 100 is where you start from. For example, if I'm to draw my Fib tool from down here, where I'm starting from is the 100. Just that you see, I even eliminated it from my Fib tool. Then up here, where I stop is the 0. Now, most people are drawing it like this, and this is not correct. Most people are starting from here, and then they identify a certain high where they stop. So most people are identifying, they expect that price will come and stop at this 50 level, right? And the 61 level. The price, of course, reacted to these levels. You can place it reacted. But what happened is the market kept going down and someone would lose money here, right? So let's try again to identify another place. Of course, sometimes it's going to work for you. It's going to work for you, but minimal times, right? Let's also try to identify if someone was to draw from up to down, right? Sometimes it's going to work for you, but most times it's not going to work for you, right? So someone would identify this high here, right? High up to low here, right? And someone would say that we expect price to either come to 50, the price to either come to this 50 level, or sorry, 38 or 50 or 61, right? So in this case, someone was lucky enough, it came between 60 and 50, and then it moved down. But again, are you going to wait until, how many of us are swingers? Very few traders are swingers, and also very few traders are patient enough to wait for the market to come back until here, unless you're drawing it in your entry timeframes. But if it's in an analysis time frame like daily, weekly, monthly, and all that, very few traders are patient enough to wait for this. So this is not the correct way to draw the Fib tool. The Fib tool is supposed to be drawn in an impulsive move, because when an impulse is happening, we expect it to give us a retracement. Now, we talked about impulses. Some of us do not know what impulses are, right? What do I mean by what an impulse is? An impulse, let me just show you here. For example, we said we first identify a trend, right? We first identify a trend. So the market was making lower low, lower high, then the market impulsed down, right? So you can clearly see that the market was not retesting anywhere. It was breaking all these levels on your left, but not retesting them. So this becomes an impulse. Are you seeing this? So after an impulse, we expect the market to give us a retracement and then keeps going down. Again, the market moved down, lower low, lower high, lower low, lower high. Then again, it impulsed. The market is not retesting anywhere, but this is what we call an impulse. Only red candles, only sellers in the market. So after an impulse like this, we expect a retracement, and the market continues either to make an impulse or to move in a normal way, or to make double bottoms. Remember, we said after an impulse, we expect retracement, impulse, or we expect impulse, retracement, double bottoms, or we expect impulse, retracement, higher low, if it's a downtrend like this one, right? And if it's an uptrend, it's just the opposite. Now, I would like us to take examples depending on, I'm using Euro USD. So I would like us to use a normal market, almost the current market. I don't want us to go so far in history. I would like us to take an example just where the market is here for an example, right? Now you can, first we said, how do we use it? First, we have to identify the trend or the direction. Here, the market is moving down. You can clearly see that the market is moving downwards, right? So that's the first step where we identified. Now, in this step, we want to identify where the market was not retesting, like it was making an impulse. Now, in this case, the market retested here. And in this case, what did the market do? The market made an impulse. Did it retest here? Let's draw and see. The market did not retest this area here. So we want to find out this is an impulse, meaning that it didn't give us a retest to this previous low. So in this case, the market gave you an impulse downwards. It broke this level, didn't retest it, and then continued dropping down. So in this case, you can use a fib tool, right? Then also the market continued going down, made a low, retested this low here, right? It retested this low. Are we together? So we're not interested. This is not an impulse because it retested. This is a normal market situation. But now we have a condition here, a situation here, sorry, where the market broke this level and never retested it. This area here was not retested, right? So I want us to use this as our example. Let me just draw it well here. The market did not reach this area here, right? So what are we going to do? We are going to bring out our fib tool. We are going to draw it where the impulse started from. The impulse started from here. Remember, we said we include our wicks. So we're going to bring our fib from up to where buyers came into the market. So in this case, the buyers came into the market here, right? And then what are we going to do? Let me just increase so that you can see properly. We want to mark our golden ratio, which is in red. I made it in red there. Then you can also mark all these levels. So I'm going to bring and mark them. I'm also going to mark the 32 like that, right? Then I'll remove my fib. Now, if the market is down here, let me just replay. I'll just replay. I'll just replay so that we want to see how did the market behave when it reached to those levels, and then we can take our trade, right? So let's just replay. The market touched one of our levels. So now what are we going to do? We want to see a loss of momentum, and we are starting to observe a loss of momentum in this area here, right? So I'm going to mark it, and then I'll go to my entry time frame. So I'll go to my entry time frame, which I normally use is H4. Now here I want to see the market giving me a change of trend, and it has already given me a change of trend here. Why? Because this level has been broken. My previous higher high has been taken out, and the market has already retested it. So let me just, we're going to take our trade from here. So I'm going to take my sell trade from here on this retest here, and my stop loss will just be above this area, properly protected. I want to take a 1 to 3. So 1 to 3. I'll put it just here. Right. So let's see how this trade plays out, if we shall win this trade. Right. Let's see if we win that trade. It played around a bit, but then finally went into profit. So let's see if we win this trade. And we won the trade from this point here, right? So you can clearly see that we picked out an impulsive move rather than waiting to pick out a highest point of the market in a bigger time frame to a lowest point. Very few traders can wait for that, for all that long, right? Now, let's also pick out an example of a buy. Let's pick out an example of a buy. Let's go back to weekly. You can use daily for your analysis time frame. Personally, I like doing my analysis in weekly. So if you're a daily trader, you can use daily. If your analysis time frame is H4, you can use it in H4. It's okay. But make sure you do it in your analysis time frame. For example, here, we had a market that broke this area here. Did not give us a retest, right? So this is an impulse. What are we going to do? We're going to draw a fib tool from where the market started impulsing from to until where sellers came into the market here, right? So what do we want to do? We're going to mark our fib tool, sorry, our golden ratio. This is our golden ratio. I'll just delete this. And then I'm going to mark the 50, and I'm also going to mark my 38 level, right? So let me just delete this one here. Let me just delete this, and I'll delete this. So let me just replay so that we can see where to take our trade from. Here. And let me delete this. So let's play. And then when the market comes back to one of our fib levels, then we shall, sellers came into the market at that point. So we want it to come back to one of our fib tools. It touches one of our fib tools from here, right? Now I'm going to mark this area here. So I'll go to my entry time frame, which is H4. right? So I'll come to my entry time frame here. Now, what do I want? I want the market to give me a change of trend. Right now, the market is still bearish. We want it to shift away. Here, the market was making lower lows, made equal highs, made a low. So we want it to shift away from making those lower lows into a bullish market, right? So let's see if it shifts away from that, making a bearish market into a bullish market. So it's still bearish. Now, this is the first time the market broke this area here. So I'm going to wait for a retest. When the market gives me a retest to this point, then we're going to take in our trade, right? So the market gave me a retest here, and this is when I'll take my trade. Let me just do this. So let me play here like this. So here is when I'll take my trade, my long trade at this point here, right? So I'm going to take a 1 to 3, and my stop loss will just be below this structure here. And I want a 1 to 3. This is a 1 to 1, not a good trade. So we want a 1 to 3 there, right? So let's see if we win this trade or we lose it. Our stop loss is supposed to be below structure. So I will increase this to 1 to 3. 1 to 3 there. So let's see if we win this trade, right? Let's see if we win this trade. It played around in our drawdown region. Let's see if we win it. Okay, still in our drawdown area. Let's see if we win the trade. Went in profit, came back. Let's see if we win it actually. Okay. Why it's taking long is because it's not an intraday trade, it's a swing trade, right? So let's see if we hit our target, right? See if we hit our target. So we hit our target at this point here. And you can clearly again see that when you use impulses, you're going to get more opportunities than waiting for using swing highs and swing lows of the biggest time frames. No matter the time frame you're using, make sure you're always looking out for impulsive moves. Go to your analysis time frame. First, identify the direction or where the market is trending to. Is it trending upwards or downwards? Then after knowing where it's going to, identify an abnormal market situation. What do I mean by that? If the market is breaking highs or breaking lows and not retesting them, we want to know if it's an impulse. So if you identify an impulse, you can bring out your Fib tool, draw it from the start to the end until where the opposite market, the opposite direction comes into the play. Then mark your levels. Remember, the price should not break 61.8. 61.8 is called golden ratio because it's supposed to protect price into that direction. The moment it is broken, it indicates that the price has changed direction. So that is it for today. That I wanted to show you guys how you can correctly and accurately use the Fib tool. One, most of you thought that it's not an analysis tool. Most of you thought it's an indicator. It's not an indicator, it's an analysis tool. That's why it's among its tools when you go to your analysis platforms or trading platforms, right? So that is it for today. I hope you guys found value in this. And in case you did, do not forget to click the likes button. And if you're new to the channel, you've just come across the channel and it's your first time watching our videos, we do create a lot of content of this caliber that is very beneficial to traders, either starting, intermediary, or advanced traders. So you can click that subscribe button so that you don't miss any other new content. That is it for today. Have a great day.